Welcome to Conquering Your Financial Future podcast. My name is Gavin Glozier. I'm the co-founder and director of Your Wealth Hub. Great to have you along for our next episode. Today I'm joined by Tom King from Nanuk Asset Management. Tom, thanks for coming in today.
Thank you, Gavin.
Great to have you in today in the hot seat. You've flown down from Brisbane early today, and I've no doubt, and quite possibly could be a lot warmer than it is in Sydney today. It's certainly quite cold down here, and wearing the jumper and all the rest, but it's nice and warm in here today. So should we start?
Let's get on.
Love Nanuk Asset Management. Love the name. Tell me about the name. Where did it come from?
Nanuk's an Inuit word. It means polar bear. And when we started the firm 8 years ago, we were looking for a name that related to our focus on environmental sustainability. And obviously the poor polar bear is something of a poster child for the world's environmental challenges.
Absolutely. And from that, you've basically set yourself a platform to which where Nanuk actually positions itself as an investment manager in that space. So I was hoping you could give me a little bit of insight into Nanuk and its investment focus, because that's really the nuts and bolts of what we're going to talk about today by way of social and environmental investing. So if you could give me a bit of background on the
So
entity.
we started the firm here in Sydney about 8 years ago. It was in the aftermath of the financial crisis in early 2009. And it came out of a series of conversations around where the long-term investment opportunities might be following that event. And our focus ended up being on broadly things to do with saving the world, looking at the potential growth in areas like energy, food and water, where it was very clear that there were going to be very significant changes in the global economy in coming decades, and no doubt related investment opportunities.
It seems to be a theme right now. If you consider we're 9 years on from when you guys started, people seem to be wanting to leave their footprint on the world in a really positive way, as opposed to the traditional carbon footprint that we hear a lot about now. People want to try to do as much as they can to reduce their carbon footprint. Have you seen, I suppose, the social trend really gain momentum to want to invest in this space? Has this become more of a social norm, you think?
Oh, there's no doubt a great deal more interest in investing in industries globally that are contributing to improving the planet's sustainability than there was a few years ago. And that, I think, has come about for a whole range of reasons. It's become much more mainstream to consider social and environmental and ethical issues in investment. There's a younger generation of investors today who are far more interested in those issues than perhaps people were generally a decade or so back. And in the last couple of years, we've seen a quite dramatic shift as people generally have started to recognise that the kind of areas we invest in things like solar energy and wind energy, energy storage, electric vehicles and so on, are not a fanciful ambition, they're a reality. They're becoming the norm, and as people can see that and read about it in the paper every day, they're starting to want to get investment exposure to it. It's
certainly getting traction. I think if you consider that South Australia now is running the largest battery operation in the world, apparently. Now that's getting traction, and mainstream media is picking up on that, where probably 10 years ago you wouldn't have seen anything like that.
Even 2 or 3 years ago, there were widely held perceptions that technologies like large-scale energy storage and even solar energy were not economically viable. And to some extent that was true at that point in time, and certainly going back 4 or 5 years ago, those technologies weren't economically viable in many applications. But this trend towards investment in these areas has been brought alive by incredible improvements in the cost and efficiency of these technologies. The rate of improvement you've seen in the cost of lithium-ion battery packs over the last 4 or 5 years is staggering. It's 20 or 25% per annum cost reductions, and that's taken technologies like energy storage and electric vehicles from being totally unviable only a few years ago to today being a reality. And that trend's going to continue, and what we've seen in South Australia will just be the first of literally thousands of those kind of facilities which are now being built around the world, instead of people investing in gas-fired turbines, which historically was the technology that would have been deployed.
Yeah, so you mentioned the 25% year-on-year reduction in the cost to actually the cost of achieving that type of technology. Is there one or many factors that you think is the probably lead indicator into how it's become so achievable? You mentioned there that investment is significantly increased into the space. Assuming technology has probably played a part in that as well, as it's become more refined?
I guess there are several things that drive that improvement over time. Significant investment in research and development, significant investment in scaling up the industry to achieve economies of scale. But like a whole raft of technologies we're already familiar with, really the driver of that improvement is just cumulative production over time, and digital technologies that we're all familiar with, the chips in our iPhones, and processing power and memory and storage in computers, technologies that have been improving at that kind of rate for decades now, and so it's not an unusual phenomenon. And what's been interesting to us is that the trajectory of sort of cost improvement in something like solar energy has been steadily 20% year-on-year reductions over 40 years. So 4 or 5 years ago, we were very confident that solar was going to get to a point where it would be a viable source of new generation, and in time to come will be the cheapest source of new generation in most of the world. And people not familiar with that kind of technology development have been surprised how quickly this has crept up. But you don't need to see 20% year-on-year improvements for very long before the cost of something halves and then falls by half again.
Absolutely. So we'll come back to solar energy. I think that's a good point. But let's just move on to the areas that you mentioned, particularly around that kind of environmental, social responsibility. Can you give me a few examples of perhaps businesses that you've invested into that are heavily focused on perhaps one or two of those areas, and what does that look like? So for everyone who's listening, just to get a bit of an idea about these types of businesses and how they would work, and obviously focus on those areas.
Look, I guess our approach within the broader landscape of socially responsible investment is to focus on companies that are involved in industries that are contributing to making the global economy more environmentally sustainable and resource efficient. And so we look at a set of industries like renewable energy, like energy efficiency technologies, like industrial efficiency technologies, things like factory automation and robotics and advanced manufacturing. We look at companies involved in advanced and sustainable materials, things like composite materials, carbon fibre, which is used in lightweight aircraft components now, things like sustainable textiles used more and more widely in the fashion industry. We look at areas like waste management, recycling, pollution control, and even in some areas in healthcare where there's opportunities to use technology to dramatically improve the efficiency of delivery of those services on a global basis. And the types of businesses that it encompasses is quite broad, but many of them are related to technologies and products that have been around for a while but perhaps haven't been adopted on a widespread basis, but where you're seeing increasing interest in using those products or increasing investment helping to bring the cost down to a point where economics are starting to drive their adoption.
There was an interesting slide I think I saw from your business recently from a session I attended where it talked about some of the big players in this space are actually being companies who have been around for a very long time, and they've been smart enough to adopt and kind of shift their thinking and invest a lot of money back into their business to take into account some of these changing shifts in technology. Is that something that we're seeing at a very simple level? Woolworths in Australia just announced their bag in the bag. The plastic bag is gone. That's a great environmental impact that's happening, and could start a lot of other companies obviously putting some pressure on it. That's obviously one example. It's very small, but is it the large players that are leading the way, or is it true innovators and small businesses, these startups coming through, that are really shaking the tree for the more traditional players in that space?
Look, it's a combination of both, I think. I mean, if you look at an industry like the automotive industry, where we're going to shift in the next couple of decades from an industry that's been entirely built around internal combustion engine technology and fossil fuel energy sources towards vehicle electrification, and ultimately probably most of the global fleet will be electric. And there are businesses involved in that industry who've been in it for a long time who are now investing in that new area of technology. It's a big challenge for them because they've got legacy assets and legacy businesses, and managing that transition can be very difficult. At the same time, you've got new companies coming in who are bringing new technology and starting with a blank sheet of paper, who have some advantages. And I think it takes both. But when you look at those kind of industries, the focus is often at the downstream end. It's the prominent brand name. If you want to buy an electric car today, you might go and buy a Tesla. Jaguar's just released a fantastic new electric vehicle. Nissan make one. You'd think of those companies perhaps. You might think of the lithium mining companies at the other end, but in between there's companies that process lithium chemicals, make cathodes and anodes and batteries and electric motors and electric components and power conversion technology and all the other pieces that go into that technology, and we look all the way across that. And so when we look to get exposure to something like the growth in electric vehicles, it'll be through often companies making power semiconductors or electrical connectors or electrical wire harnesses that are benefiting from that trend. They're mature businesses, profitable businesses that have been around for decades, if not longer, and are going to see a big benefit and contribute in a positive way to that transition.
There's almost been also a shift in bigger companies creating their own incubator or startup kind of funds where they're then seeding all these little investments, hoping to bring those smaller technologies, the new players in as well. Is that something that you're seeing as well in that space? Is there bigger companies seeding the smaller ones to bring in and harness the technology they're bringing in?
Look, we don't see a great deal of it. There's certainly a whole lot of early stage investment going on in the technology areas that we do look at, and many billions of dollars being spent by early stage investors in those areas, and some interesting technologies that come out of that. I guess our view is making money from investing in those early stage technologies is very difficult. If you don't know whether the technology is going to work, it's very hard to work out whether it's a good investment or not. And the reality is most of the sort of technologies that are changing the world or going to change the world are already proven technologies. And so the companies we're investing in typically aren't investing large amounts of money into something that's new or unproven. They're taking something that already works and they're scaling it up and reducing the cost and selling a lot more of it.
So you mentioned a few times around the types of companies that you're looking for. Can you give me a bit of a clear picture around, I'm assuming there's some kind of guideline, there's probably some no-go areas for an entity that you're investing in. We talked before about perhaps mining is an area that may be of interest for various reasons around the community and environmental impacts of some of that. But from your perspective, what would a typical guideline look like if you're investing in a company that you feel is making a difference? What's the test to make sure it ticks all the boxes?
Look, the first thing is whether it's involved in an area that's contributing positively to improving global environmental sustainability or resource efficiency. And we come at that in a very holistic manner. We specifically look at a set of industries where we think there is a clear connection to those outcomes. And in order for a company to be considered in our investment universe, a material part of its business and its value has to relate to those industry groupings. Alongside that, we also negatively screen our investment universe, so we specifically exclude companies that are involved in a range of areas that aren't aligned with those outcomes or are otherwise activities or areas that we don't feel comfortable investing in. And so that excludes companies that are materially involved in any sort of fossil fuel exploration or production, in coal mining or coal-fired generation, in things to do with weapons, armaments and defence spending, in areas like alcohol, tobacco, gaming and so on, and then we exclude companies with particularly poor track records around environmental stewardship and breaches of social norms and human rights and labour standards, things like that.
And are they reviewed on a regular basis where a company may be perceived as being, let's just pick on Exxon or BHP, one of the big oil manufacturers, had an interesting record, some major spills and the rest, but all of a sudden they've changed their core values and have cleaned their business up, but they're focusing now on upholding their top rating and making sure their safety record is really good. What would it take to change a business from going from really bad to really good? And is it something that's quite radical, or is it a subtle difference? How would that work?
Yeah, look, I don't want to use the terms bad to good, because I think that can taint the discussion a little bit. A company like a BP wouldn't be potential inclusion within our scope, within our broader opportunity set, let alone our portfolio, unless a quarter of its business was in areas like renewable energy. And it's not close to that today, and so it's not up for consideration. If it did get to that point, because of the extent of its involvement in oil and gas exploration production, it would get knocked out anyway, and it wouldn't be until the point that became a relatively small part of their business that we would be allowed to consider it. And then once it's in our investment universe, we would only look at it if it was of sufficient size. A company like that's a very large business. Typically we only invest in companies that are somewhere north of about $500 million market cap, so quite significant enterprises in their own right. I guess the average size businesses that we invest in are in the range of about $5 to $10 billion market cap. And then our investment approach is to try and find companies that fall within that investment universe that are good investments that offer attractive return potential. So we're not looking at our investment universe and saying, well, we feel like we need to allocate capital into electric vehicles. Here's a company that has high exposure, let's buy that. We're looking across a much broader investment universe and saying, where can we find opportunities that are going to deliver our investors good investment outcomes? And that depends in part on what's happening in those industries and what the consequences of that are for the companies. Are they going to see profitable growth in the future? And it depends in part on what the share market's doing at any point in time, because we seek to buy good companies at points in time when they're priced in a way that there's good return potential.
They're cheaper.
Exactly. We don't like to buy things that are expensive, and so if all the solar stocks in the world have had a big run up, we won't own any solar stocks.
Okay, so that brings it to the next question, and you mentioned there around that 25% cutoff kind of point. Can you just explain that a little bit around when they cross over into being kind of overwhelmingly invested or focused on sustainable and positively impacting the world?
Yeah, look, I mean, you have to draw a line somewhere, and we thought that was an appropriate level of materiality for determining whether we should consider something. That if you had a company and only 10% of its activities were involved in one of the areas that we're interested in, that wasn't material enough for us to leverage our expertise to generate returns for our clients. And once you get around that 25% level, that opportunity is much clearer. There are funds and indices and ETFs out there that use higher materiality thresholds, but we've found historically that if you start to become too principled about the level of sort of materiality of involvement in the industries, you narrow your opportunity set very significantly, and it becomes much harder to put together a good quality diversified portfolio that will deliver good investment outcomes for investors.
There's an international guideline the UN put out. Do you mind just talking about that a little bit around kind of when they get the stamp of being a globally sustainable business entity?
I guess there are several things the UN does. There's a UN PRI, Principles of Responsible Investment organisation, that's a association of investment managers that focus on a particular set of principles in the way that they go about investing. There's UN Sustainable Development Goals, which consider what it is that's important to achieve in the global economy longer term. Our focus has really been on relating the investments that we make to those UN Sustainable Development Goals. And we can demonstrate with data now that our portfolio is more materially connected to delivering those outcomes at a global level than a traditional global fund or benchmark would be.
Okay. As a consumer looking to invest in move away from the traditional oil space or big companies, banks, it sounds like that the marketplace has matured a lot, where there are options now to invest into either individual businesses or into funds that focus on having this social and environmental bent, which is super important. It sounds like because there's more businesses like yourself that are investing in it, there's going to be a greater focus. And if there's more money flowing into the sector, that means that not only will the price of this technology drop, it's going to be better for everyone and creating broader good. What's your kind of thoughts around someone looking to invest into this space? What should they be looking for? I suppose when you look at how much you put into a particular sector like this, is this something where someone would say, I'm going to stick 100% of my money into this space, or is it more of a case that someone's going to be expecting to receive a little bit of a lesser return? So I think in the past, people's perception have been, if they're doing greater good, then perhaps it's not going to be doing as well as a business. I suppose, tackle the last part first, which is around the perception. It's a big question there, but
it's a great question, because you're right. The perception has been that if you invest in saving the world, it comes at a price. I guess our whole focus as a firm has been that the transitions that the global economy has to undertake in coming decades that are already underway are going to present great investment opportunities, and it's an area in which we can generate better returns by focusing on those opportunities. And the corollary of that is that a whole lot of the areas that we don't focus on are going to be negatively impacted, and investors who remain exposed in those areas are carrying risks. I guess to answer the question more broadly, the landscape of responsible or social or ethical or SRI or ESG investment, whatever you want to call it, isn't well defined, and there are a lot of terms that are used interchangeably and very loosely to describe different types of responsible investment strategies, and there are a range of different approaches that seek to achieve different goals, and where the balance between financial and non-financial outcomes is different. And so if you're looking to invest in a responsible or sustainable or ethical manner, the first thing you need to do is to be very clear about what it is that your objectives are. Are you wanting to invest in these areas because you think they will generate better investment returns for you longer term? Are you investing in these areas because you want to see particular non-financial outcomes as a result of the way your capital is deployed and managed? And if you can answer those questions, then you've probably you've got a long way to identifying what's right for you. Is it the right place to put all your money? Well, I wouldn't suggest people should think about putting all their money into a global equity strategy. People need to have diversified investment portfolios suitable to their own needs, and people like yourselves are very good at advising around what's appropriate in different situations. It's certainly possible today, with the range of investment options out there, to put together a diversified multi-asset portfolio that is green or ethical or socially responsible across all its different components. Your options are obviously more limited than they would otherwise be, but it's not impossible. and it really, it comes down to what people feel like they want to achieve or want to do.
So those two key questions, understanding why you're investing. Are you investing for the return, or you're investing for the greater good and prepared to counter the two? So they're really good tips. I've got a question that's kind of left field, and I know when I hear the debate around solar energy in Australia being such a big place, why are we not doing more in the middle of Australia with so much sun that goes wasted each year? Do you have a view on solar energy in Australia, and if it will ever be, or would it possibly be the biggest contributor to generating power in our country? It's an interesting question. We hear a lot about it.
Well, look, I think at some stage in the future it will be. If you look around the world today, where new generation is being built, about half of the new generation in most parts of the world today being built is solar, and it's solar because solar is cheaper than wind, it's cheaper than gas-fired power, it's cheaper than coal-fired power, it's far cheaper than nuclear power, and it's only going to get cheaper in the future. And the cost of deploying solar in parts of the world like the Middle East and in the Central Americas today is less than the cost of running our antiquated coal-fired power stations in Australia. So inevitably, I think solar does become the cheapest form of new generation in Australia and will be a very significant part of our power supply. The constraints on that at the moment are, firstly, building solar in Australia is more expensive than it is in other parts of the world. So our solar industry isn't as well developed. Our labour costs are higher, the regulatory and planning issues and land costs and things like that are higher. The balance of system costs for building a plant other than the solar panels are higher. That stuff will come down over time as more and more solar in this country is built, and so the cost of solar here will come down like it has everywhere else in the world at 20 or 25% per annum year on year, and we'll get there. And then look, the other problem is it can't provide round the clock power, and so if you're going to have a lot of solar energy in the grid, you need a energy system that can accommodate that, and likely part of that answer is energy storage. Now, same thing as solar in other parts of the world, we're already at a point where medium to large scale solar and storage systems are providing power at a lesser cost than traditional centralised fossil fuel generation with a traditional grid around it, and likely, with almost certainty, that's where we end up in Australia. So look, I think there's a huge future for it. There's obviously a lot of political debate about it. There's a lot of vested interests with significant political influence who are going to seek to defer, how quickly that happens here. But ultimately, it'll happen. And if it's not driven by the government and by the utilities, well, the reality is that before too long, it's going to be cheaper for you to put a solar system and storage system on your own house and generate your own solar energy round the clock than it will be to buy your power from the grid. And when you get to that point, which isn't far away today, that'll be hugely disruptive. The utilities and the government and the infrastructure owners will have to act, or consumers will just go and do it themselves.
Yeah, we're already seeing different types of technology, not only kind of going this insular way by obviously harnessing what they have, but pumping unused energy back into either the grid or pumping into other places. We're seeing it through, I've seen various startups talk about unused data and CPU space and different areas in the IT space. So it only seemed that type of application would be able to apply into that space as well. So yeah, it makes a lot of sense. Look, Tom, thanks so much for coming in today. It was really great to hear from you and hear what Nanuk Asset Management are doing. We've had some great information that you've been able to share with us around the evolution of the social, environmental and ethical investing segment. It seems that there's just so much great going on. It's really good to see businesses like yourself being able to raise the profile of this segment of investment that may hopefully allow people to invest in this space as well. So Again, Tom, thanks for your time, and for everyone at home, thanks so much for tuning in. I hope you enjoyed this episode of Your Wealth Hub's Conquering Your Financial Future, and we'll hope to see you next time. Thanks a lot.